Okay, very good morning everyone. Monday the 12th of June, hope you had a good weekend. Just getting underway then, a summary of the weekend's news, some particular focus of course on the fallout of the hung parliament we had at the end of last week, so we'll take a look at that and what the latest state of play is. But just taking a look at the charts overall in summary this morning, you can see things relatively quiet, a little bit softer in equity markets this morning. One thing to keep in mind is we did see some fairly aggressive selling in the US tech sector, which if you remember rightly had been a stark outperformer really year to date, on the premise of particularly a lot of this promise on the corporate tax cut and this brief period of an even lower level of say 10%. I think Trump was indicating in regard to offshore money coming back into the States. But this was a headline I saw this morning: US tech shares on track for their biggest drop in almost a year, which did cause some underperformance in the Nasdaq comparative to the other US indices late on Friday. Wasn't actually anything fundamental that initiated that move. Most of what I'm reading this morning is pinning that on some profit taking on, you look at names, the FANG stocks, so Facebook, Amazon, Google or Alphabet, some of those names, Facebook being up in excess of 35–40% year to date. So it does make a bit of sense that maybe people just booking a little bit of profit, some talking about a rotation not out of equities but some sector plays coming out of the tech space and into more undervalued areas. But how has that translated to this morning? Hasn't been much in the way of a read across. As I say, equities a little bit softer, but if you're looking at the DAX here, sitting very tight round pivot, not really doing too much as yet. Currency wise, the most, what might be fairly surprising to a lot of people, is the pound not really doing a great deal at all. It's just sitting here, found a bit of support at pivot so far this morning, but obviously you've got this big gap lower. This was when we reopened for electronic trade on what would have been Thursday night, going into overnight Friday session, into the hung parliament situation. When Europe came in, you can see that the kind of timing when UK and European participants then react to the headlines, obviously there's a little bit more accuracy to the number of actual constituents that would have declared by that time, so the result was very much fully known by then. We dipped all the way down to we got a low here, 126.38. Before then actually we recovered some, and we've really just sat sideways since then. So a quick look and review then of the latest, the news that's come out from the weekend. Obviously it's been the main dominant story. One of the comments that I thought stood out the most was from George Osborne. I'm not sure if anyone saw him speak at the weekend. He said, in regards to Theresa May, she is a dead woman walking, and the only question is how long she remains on death row. Pretty bold comment from a chap who is fairly dull, I would say, as the Chancellor. He certainly has started to perk up a little bit. Obviously, from an internal party politics point of view in the Conservatives, George Osborne very much closely aligned with David Cameron, those two really having lost their jobs with the EU referendum, and so likely unsurprising, I'd say, to hear him making such commentary. But in a sign of the PM's weakness, she had to abandon plans for a sweeping cabinet reshuffle. That was what was expected on the back of a Tory majority, because she could have then positioned herself for her kind of key Brexit team. But Philip Hammond, the Chancellor, has kept his job. Most of the senior team have stayed in place. She's even elevated her long-time ally Damien Green, a kind of strong pro-European person, to the post of First Secretary of State, in effect then her deputy. So putting in a pro-European person would be a key player, if you like, in setting Brexit policy. So this kind of hard Brexit line is going to get even more difficult for her to continue. So what's going to be interesting is what kind of direction does she now start to take kind of policy going forward. In terms of what else has been going on at the weekend, There's been lots of toing and froing about her future. Boris Johnson, the Foreign Secretary, insisted that reports that he wanted to oust Theresa May. In his own words, he deemed them as tripe, as only Boris can describe things. Number 10 said on Sunday that Mrs May had spoken to the DUP. Remember, that's the Northern Irish Party, which has about 10 seats, which could be influential then in tipping the balance and giving her a majority in Parliament, discussing finalising a confidence and supply deal when Parliament returns next week. So there was a bit of toing and froing at the weekend between have they got a deal done, have they not. Seemingly the Conservatives jumping the gun a little bit early, but it's seemingly there's still discussion still to be had in order to get that deal kind of done and dusted. So Theresa May at this point holding firm, kind of saying that she said she would stay on if she won the election. She has in fact won it, albeit with a minority at this point, but there's been growing calls for her to step aside. So definitely this is a fluid situation. One thing that we've learned certainly with politics in the last weeks and months is that the situation can change quite drastically very quickly. If that were the case, this was what I saw. I saw this graphic at the weekend. This was a YouGov survey done just a couple of days ago, and it said if Theresa May stood down, would the following make a good or bad leader? And as far as public perception, all but one are bad. Boris comes off very badly. 52% of people think he would be a bad leader. Only 24% would be good. He's only outdone by someone who's actually been brought back into the cabinet, Sirius Snape himself, Michael Gove, as he was being termed by the press at the time, because if you remember, he was a team up with Boris Johnson to run for the leadership of the Conservative Party before turning on his seemingly closest ally. But Gove has been brought back into the fold, and he's lost a lot of trust, I would say, of public perception and internally in the Conservative Party. Hence the reason why his bad leader number is so high. The one person from Scotland, Ruth Davidson, though, a lot of people have been talking about her. A bit more younger, a bit more dynamic, a bit more, as you would say, in touch with the people. She could be a very interesting replacement, but I would say probably her inexperience is against her in that respect, and she's also a Scottish politician as well. So definitely not looking particularly healthy at this point for the Conservatives, and Corbyn has taken full advantage of this. I even saw Corbyn dressed in a sharp suit this morning with a skinny red tie. He certainly has stepped up his game, and he's been saying that he will be PM, or he can still have a chance to be PM in the coming months, which isn't against all probabilities at this point. Certainly it could unfold that way in that situation. One interesting thing I did see here, and obviously when we were talking this time on Friday about the election, it was all about the youth turnout. We had known already that a number of younger voters had registered. The only thing is we had seen that before, but on the day of voting itself, very rarely had that come to fruition, i.e. had they actually cast a vote in support of their party. But what's quite interesting here is a graphic that I saw from Deutsche Bank, and it really encapsulates what Labour did in this election, which was really cultivate a buzz for the 18 to 24-year-old age group that made all the difference for them. And what you can see here is at 70% turnout, that's the highest that we've had. You'd have to go all the way back, really, to the 1960s. So if we were to have, let's say in a hypothetical scenario, if we did have another election, some polls at the weekend actually state now that there's a chance that Labour could actually win now. In terms of if there was another EU referendum, the question would be then, if participation amongst the young is at multi-decades high and they are very heavily pro-Remain, would that also influence and change potential if we were to get another kind of question put to the public about whether or not we want to leave the EU. But at this point, that isn't the case. The case is still of a Brexit. And looking at the pound this morning, as you said, as I said, so far, not a lot going on. But if we start to broaden this chart out and look from a slightly longer perspective, I think what has been surprising is that even though we had a hung parliament, we got very close to testing that kind of 125.85. That was their level in the 18th of April when she called the snap election. We spiked higher. We took most of that move back, but we failed to sustain that weakness. And in actuality, we're only down about 1.5% or so from where we were in cable, which is a very small move. A lot of people were suggesting with a hung parliament we could have been down breaching 125, on course for kind of 120 type direction, but that hasn't materialized as yet. One of the things is that with a minority government, what she has not got now is the ability to push through on this hard Brexit kind of line. Even with some of these subtle reshuffles on the cabinet, even those are slightly more pro-European, as we said. And as such, I would just be a little bit hesitant to want to short this market quite aggressively at this point, because actually I think what you might get is if it starts erring towards a soft Brexit, we might start to pick up a bit of traction again on the upside. Now that's not to say that in the long run, I think that medium to long term, i.e. by year end, we will still be weaker in the pound against the dollar. But in the interim period, if we start to get towards either Theresa May steps aside and then someone else steps in who's more pro-European, able to then get on better with a softer Brexit with other opposition parties in the lower house of Parliament, does this provide some relief rally? Albeit we still need to get down to business and start discussing that of Brexit. The one thing that could disrupt that, I guess, and become more negative is if Theresa May stays in and week after week goes by, she really struggles to get anything done. Popularity of the Conservatives starts to slowly fizzle more and more. Then we go into a case of another election could be on the cards. If that happens, that delays this Brexit talk process even further. Things like that, I guess, could act as more of a negative factor in the more shorter term. So at this point in time, cable's just kind of sitting here mid-range of what we'd been in for most of Friday's session after the morning volatility had passed. And I think what the market's really looking for here is a bit more clarity. One, as to the DUP and the Conservatives, do they get a concrete deal done? And secondly, Theresa May's future. And then thirdly, how this is going to influence then the shape of Brexit talks. So until those questions get answered, I think cable might not do a great deal until that point. One thing in the background of this is obviously the UK economy. And this is a headline from this morning. Now granted, these are figures from Visa. This isn't by any means a major piece of economic information, but it definitely does go to show the current situation that we're facing here in the UK, and that is consumer spending falls for the first time in nearly 4 years according to their readings. So British consumers were already tightening the belts amid increasing inflation, i.e. the cost of goods going up. Now we've got some degree of political uncertainty heightened by a hung parliament. That's probably only going to reduce the confidence of the consumer to spend. And it's these types of things that make banks longer term more negative on the prospects for the UK economy going forward. And hence the reason why most people by year end see a weaker pound from where it is at this present point in time. Okay, elsewhere, there's another situation ongoing, and I found it quite amazing how, given so much attention towards the presidential election that we had in France just a few weeks ago, it's amazing what difference media interest does to actual popularity of people participating in a vote. I can't remember the actual stat, but I did read it earlier this morning, and the participation rate for the elections for the actual National Assembly or the parliamentary election in France at the weekend was massively down from what we had from the presidential one. If you think about it, we've been so sidelined with the UK focus. No one's really talked about the French legislative election, and actually it's the second election in France which is more important, because without control over Parliament, Macron can't actually push through any of his policies. Now, the situation going into this had changed slightly. Macron has made a real stellar start to his leadership of France. He's hosted some pretty good meetings on a very senior level with the likes of Trump, Merkel, Theresa May, and so on and so forth. And if anything, this kind of far-right sentiment in France after Le Pen lost has very much been brushed aside. But quite interestingly, the dynamics and how quickly it can change politically, if you think about it, the Socialist Party in France, in what otherwise would be viewed as quite a socialist country, has now fallen sharply to the wayside, whereas in Britain we're about to have one of the most socialist governments potentially come into power than we've had in a number of decades. So this kind of ebb and flow of how the situations are changing in France and in the UK to quite stark contrast has been very interesting in that respect. But Macron's year-old party, now called the Republic on the Move, won about 31.5% of the vote, almost 10 percentage points ahead of the Republicans. The result would give Macron backers 415 to 455 seats out of the 577 that were up for grabs in the lower house. This would give Macron the biggest majority in the French National Assembly since 1993. Now, so you're talking about a guy whose party is 1 year old, has come out of nowhere and really captured, I guess, you've got the dissatisfied left, people not willing to go as far as the National Front on the right, so his kind of centrist politics has managed to sweep up all of those dissatisfied voters, and the biggest majority now that his party will have since 1993. If anything, this generally means then is a positive in terms of European sentiment. It's not going to be a tradable thing for today per se, but definitely for overall it means that political risk dissipates. France then can push ahead with reforms at a faster pace, given that his party has more power. You can see here this graphic just defining how big of control that they'll have of their parliament. The socialists taking a real beating in that respect. The other politics, obviously it's been UK, France and Italy for quite a while, was this chap, Beppe Grillo. And so we had, quite interestingly, the Five-Star Movement, of which he leads, faces a setback in Italy's municipal elections. Now this was quite important because, you know, if we look back a few months ago, there was a real risk that we could have had a far-right government or a far-right politician as part of the government in the Netherlands. You could have had Le Pen National Front in France, and then you could have had a Five-Star Movement as a Eurosceptic party in Italy. But it's quite amazing how the situation has changed. A lot of this political risk, albeit we're still navigating those waters here in Britain. In Italy, much like in France, the populist movement has started to fade slightly. And exit polls showed that the Five-Star Movement is failing to make the runoff contests in a string of larger cities across Italy. A lot of this, though, keep in mind, and a reason why the Five-Star Movement might not be doing well in kind of more local level elections, is that the party was only established back in 2009, so it has struggled to set up a broad network of local or localized politicians, including strong candidates for mayor. And so as such, probably, again, this is more about a capturing of this populist sentiment rather than it is about people on the ground in these smaller cities across Italy, which are very much embedded to the more traditional party's presence. So not to be discounted, I'd say, on the Italian situation, but certainly The risk of a snap election, things of that nature coming out of Italy, have decreased substantially. So again, from a euro currency perspective, and certainly from a European equity perspective, something which the Italian banking sector, the financials in particular in Italy, are extremely susceptible to political risk. So the fact that that's gone away should be a net more stabilizing factor for European equities. Looking at the euro, just having a look where we trade at the moment. Obviously we've had a bit of volatility last week. You had the ECB interest rate decision. They did step up their kind of view about the economic growth situation, calling it balanced. But the one thing that they did do was they continue to say how important quantitative easing is. It's been a real positive for the economy. They by far did not start to hint towards the fact that we could be getting at the end of that process. Quite the contrary. So they're keeping a fairly steady, gradual approach. And we did weaken in a kind of second half of last week after that ECB press conference came out. Don't forget though, the one thing that you did have at the time last week as well is you had pound weakness on the hung parliament, jitters on domestic politics. You had a slightly dovish sounding on the QE side and future policy out of the ECB. And this all came in the context, of course, of FBI director or former James Comey giving a testimony which really didn't bring anything new to light of a negative nature against Donald Trump, and certainly any fear about enhancement of the probability of an impeachment did not happen, and the dollar strengthened at the end of last week and hence as well pushed some of this price lower. We found a bit of support around those lows that was seen in play around the end of May, and we've kind of bounced back up on the intraday levels, trading at R2 again. But a stabilizing situation with Macron capturing a majority in the National Assembly, albeit that was largely expected, but getting confirmation of that. Then also you've got the risk of a snap election in Italy, which would be destabilizing not just for Italy and their banks, but also for European sentiment. That's also reduced as well. So a couple of positive catalysts perhaps helping recover the euro from its lows. Okay, quick look at the calendar and the schedule for the week. The one thing obviously you'll be very aware of is that today, i.e. Monday's trading session, is very quiet. There is absolutely nothing on this calendar of interest, I'm afraid. One thing I would say is that the UK Conservative DUP conversations are ongoing. Even the fate of Theresa May is still somewhat uncertain. So I definitely would be still monitoring Twitter, keeping an ear on the squawk box in case of any breaking news. Cable, I think at this point, people are just kind of sitting on the sidelines waiting for more details to come out on those subjects. Otherwise, the euro is looking fairly bullish this morning. But looking at the week, it'll probably make a bit more sense. Monday, as you can see, very quiet, but Tuesday things definitely start to pick up, and Tuesday is a very important day because we'll get the latest inflation readings coming out of the UK. And obviously inflation, very important as to how quickly is it rising and where will the peak of CPI be for the UK, i.e. will the Bank of England be forced into taking any kind of preactive action in order to negate inflation running away. At this point, seemingly it has been contained. The fact that the pound has been trading up at 130 the last couple of weeks may well have helped that situation, but we'll be looking out for that tomorrow. That will be important for sterling currency and UK assets. You've then got German ZEW economic sentiment, this being the Economist and Analysts survey of forward-looking sentiment. So this is kind of the second important data after IFO, which is the companies themselves. So a soft piece of economic data to look out for. You've then got US PPI, core PPI numbers, so anything to do with the measurement of prices is always very important from a Fed perspective. Then you've got the API crude oil inventories, which will be followed by the DOEs on Wednesday. Now, Wednesday, the big thing, of course, will be the FOMC meeting. I will stick around for that. Let's just take a look at the FOMC meeting. A couple of things that people are looking at. This is, firstly, let's just take a look at this chart. This is the federal funds rate futures. So this is shorter dated 30-day interest rate futures. And this is what the market is expecting in terms of a hike of 25 basis points from the Federal Reserve. It's priced at this point at 96%. Very similar situation then, I would say, as to what we saw in March. And the reason why June is important, because the distance between March and June means that we're now in a month where we'll get an update to the summary of economic projections, and we'll also get a press conference with Janet Yellen. So hike is priced in. The question mark very much so will be on what is the communication for the path thereafter. So far we've had the hike in March. It looks all but certain we'll get a hike in June. As far as the projections are telling us, the Fed are going to hike 3 times in 2017. So do they stick to that? Is that altered in any way? I personally would be expecting very little deviation from that overall path in terms of what interest rates are indicating. So I would imagine the Fed will stay the course, still expected to hike rates 1 time thereafter the June meeting. Economists see 2 more rate hikes this year, so in fitting with that, the starter's balance sheet unwinding, if you actually look at the timeline here, the Fed to start shrinking its $4.5 trillion balance sheet in Q4 of this year is what the median survey economists is saying on Wall Street. The cycle peak of 3% not seen until Q4 of 2019. One of the other charts here, inflation expectations. We may have reached the 2% hurdle, i.e. that's the target, 2% inflation in the US, but sustaining it for an entire quarter is a different story. So quite interestingly here, the orange denotes then the survey. Almost half economists surveyed do not see 3 consecutive months of above 2% inflation to at least the end of 2018. It's this fairly benign inflation, albeit it's at target, but it's just kind of sitting there, and if anything it has a bias to be slightly on the weaker side from recent data we've had, means that there's no rush or no need for the Fed to be unwinding their accommodative policies very aggressively. So I'd be expecting, again, similar to March, a hike, but what you might get is a slightly dovish sounding hike as far as the communication that they will utter alongside the actual decision itself. So that's Wednesday. I will be around for that, so the guys who are in-house, you're more than welcome to stay. That'll be at 7 o'clock. It'll probably wrap up by about 8. So you've got a fairly long day ahead of you on Wednesday. Thursday, one central bank that not a lot of people are talking about at the moment, Bank of England. I would not be expecting really anything out of them at this point. As far as the Bank of England are concerned, the dual force of a hung parliament and Brexit, these political uncertainties will mean that they're very much going to be on hold, cautious mode, at least for the time being, with half an eye on the rising inflation. But we'll get those inflation numbers, don't forget, on Tuesday. So that will be key to kind of get a forward look as to what they might say on that regard on Thursday, when we'll also get retail sales. And then on Friday, you've got the Bank of Japan interest rate decision. Eurozone inflation data will also be very important in regards to ECB policy. So quite an interesting week, but Monday, from a schedule perspective, probably to a lesser extent. So I guess for any of the guys who are trading live this week for the first time, actually, now you've transitioned over to stage 3 in the career program, just be realistic with your expectations. Today is probably, by calendar perspective, the least interesting day. It's the day which, from a schedule perspective, will probably carry the less trigger to initiate market movement. But from Tuesday onwards, it definitely does start to pick up. And each day actually has some periods of interest. So keep that in mind. Good luck for the couple of weeks ahead that you've got. Trading live funds for the first time. Don't feel in any rush to just pull the trigger straight away. But a day like today, maybe technicals might take greater influence, keeping an ear on the UK political situation, and elsewhere, euro looking fairly bullish for those aforementioned reasons we've discussed here in the briefing. Okay guys, enjoy the session, and have a good week. Thank you very much.